So you're a homeowner and the insurance rates are going up, and you're wondering what causes this? Why is the insurance rate on my home constantly going up? This is a battle. Today we're going to talk about it. We're going to dive into what causes your home insurance to go up, ways to prevent that, and how often should you shop for homeowners insurance. Hey everybody, this is Mark with Think Insurance, and I've got over a decade's worth of experience in the home and auto insurance industry. So if you're looking for advice, tips, and ways to save time and money and get the best rates, this is what this whole channel is about. It's free advice from me to you. If you guys are interested in learning more about that, definitely think about subscribing. So there's about 100 ways that insurance can cause the rates to go up, but there's 11 that we're going to talk about, 11 main things that are going to cause your insurance rates to fluctuate. Now at the end of this video, I am going to explain ways to lower those costs. Now these aren't in any particular order, but the first piece that we're going to talk about is the carrier losses. So everything's based on each specific company, whether you're with Geico or Progressive or AAA or Safeco, whatever the name of the company that you're with, they have a loss ratio. And if they go above that loss ratio, their product, which is your home insurance or their auto insurance, that's what they call products, have to raise the prices. They have to meet the demand. If they have too many losses in a specific area, so they're in an area, specific company, you're the person there, and if that area or you have too many losses in that space, that risk goes up. And that is one of the major ways and reasons home insurance fluctuates from one person to the next. And that leads into the second piece because that's the area that you're in, the location of your home, but it's also the population. So cities start out small and they grow and grow and grow, and that naturally causes more claims to happen and whatnot. So if you're in an older area, you're typically going to be bundled with the homes that are older, or you're going to have the risk for older homes. If you're in a newer area, the risk that you could go negative is that there's a lot of people, a lot more people moving in that neighborhood. The risk could change, and so those are part of the effects that you could have on the area that you're in. The third piece is something that you can protect. It's called inflation, and there's actually a protection for you that you can purchase. Typically, it's almost free. It comes with these packages that you get with insurance, like the Elite package or the Advanced package or whatever that company calls it, but it's an inflation guard that builds into that. So every year your house will go up about 3% in value. Now the insurance company is also going to count that too, because the cost of lumber to rebuild your house, because we got to imagine the house burnt down, worst case scenario, you've got to rebuild. And rebuilding that house for the lumber might cost $10 for the materials today, might be $11 a year later. So that cost of inflation is going to add into your policy, which tends to creep up the price. The fourth way is the toys that you have. So having a trampoline, having a pool somewhat counts as it, but having a diving board with the pool is huge. Having a diving board and a slide and a pool. Those are things that insurance companies love or hate. Some companies are perfectly fine with them. They don't even care. Put it on the policy. There's like a $70 charge. Other companies are like, oh my gosh, this is the worst thing in the world. These guys are going to jump off a diving board. It's going to snap in half. Kid's going to hit his head. He's going to drown. And we're getting a lawsuit for $500,000. And those companies are like, don't ever do it. And you're going to quickly know which one you're with because you're going to have either a huge price increase or you're going to have something where they're just like, oh, okay, it's just part of the policy. Most companies are leaning to allow that as long as you have gates that are 4 feet, that are fences that are 4 feet or taller, and you've got it locking so that neighbors couldn't just jump in your pool on a party night when you're gone on vacation and whatnot. Same thing goes for trampolines. Those are high risk. Those are liability claims. And when you're carrying homeowners insurance, you typically have $100,000, $300,000, or $500,000 worth of liability. They have a med pay to cover some of like a broken arm, but if there's a lot of damage or a lot of medical issues with that person, anyone that's not in your house, then that's going to be a big risk to the insurance, and they're going to raise the rates for that. The fifth reason your home insurance is going up or goes up is because of the design of your house. There's a lot of different new intricate designs of homes, and the more shapes and designs and curves that they have, the more cost it is to rebuild. So this is kind of going into a couple categories where we're rebuilding the cost of the house, and that causes the rate to be high. It doesn't necessarily cause the rate to increase year over year, because once you've done what's called a replacement cost estimate, and they've had an inspector go out, they know what the house looks like, the shape, the condition, then they're usually okay with keeping that. So this piece is more so when you're shopping, or if you're going to buy, or if you've already bought insurance, this is one of the reasons your rate is what it is today. The biggest reason, and number 6, is going to be your claims history. If you've had any claims, home insurance is not like auto insurance, where it's not your fault or it is your fault. It's always considered your fault to a point. We understand it might not be your fault, but it's the home's fault. or it's something to do with any type of claim. Home insurance, on average, don't typically file a claim more than one time every 10 years. So if you happen to be in that situation where maybe your water backed up and failed and you had a $5,000 claim there, or maybe the house got hit by electricity, or there was a mini fire, or something along those lines, typically you get 2 strikes, and on your third one, you're out with most companies. Some companies will kick you out for the second strike. It's not that they're against you or the house, it's just they'll never make that money back. And the risk of having that third claim is so much higher that they're either going to price themselves out of the market where they're just too expensive, or they're just going to non-renew you, and then you'll just go to a different insurance company. And this is the part where I recommend people to definitely have an agent. The biggest issue I've seen in the past is when you work with those 1-800 phone numbers and you're calling directly, you don't get the advice because they're more for the company. They have guidelines and rules they have to follow. On top of they're typically not trained as well as an agent who does it all day long. They just answer the calls and stick to that specific category. And when you call for that advice, sometimes you don't need to file a claim. And when you call those, typically they're required to note it or put it on file, versus if you have an agent who's willing to give you that advice and say, no problem, just get some lumber, you can fix it easy. It's $100, pay a guy, here's a guy. And then it doesn't become a claim. These companies know that that's the process and they're perfectly fine with it. But if you go directly to them, a lot of times they don't have an option because the people aren't widely trained to handle those situations, and they don't want to be risked in that pool where they don't want what's called an error and omissions claim where they give you advice and it just wasn't good. Number 7, if you look up, you will notice that on your house there is shingles or tile or clay or metal. There's a roof. There's something on your house, and that deteriorates over time. It's supposed to block the rain, block the wind. It's 20 to 25 years to 50 years, however long your roof is supposed to last. They're all different. That makes a difference in the company. When you're building what's called a replacement cost estimate, they count that into consideration. How old is your roof? When was it last replaced? That's going to cause your insurance to go up over time, because if your roof gets older and older and older, it's more likely that you're going to have a claim where a storm comes through and the shingle that would have held doesn't hold anymore, and it punches a hole in the roof, rain comes in, there's a $10,000 plus claim that they've now got to carry. On the opposite way, if you replace your roof, let your insurance agent know, because there's a discount that you'll typically get for having a newer roof. And here's where the comments blow up. If we were live, everybody would be, I hate this company. It would be your credit score. Your credit does play a factor. They call it an insurance score, which is way more in depth than credit. But the biggest factor of an insurance score is your credit. So the better credit that you have, the better prices that you're going to get in your insurance. If your credit goes down and they verify your credit each year, which they don't typically do, but that can cause your rate to go up. I know I have one. Most of you have one. Let me know in the comments below. Who here has a dog? What kind of dog? I'm curious. Have you guys had any effects on your insurance once they found out that you had a dog? Some companies just flat out don't care if you have a dog. They don't even care what breed you have. They just know the risk isn't that high. Other companies have lost their shirts because a dog bit somebody. So most companies, and I would say most being 8 to 9 out of 10 companies, are going to want to know what type of dogs you have, what breeds they are, and if they're eligible, right there is the breed, and what bite history they have. That can cause your rates to go up. Most companies will charge for dogs, and that's, once again, that falls in that risk profile. That dog is adding a little bit of risk to that type of policy where they could pay out a $100,000, $300,000, $500,000 claim because somebody got hurt because of the dog bite. So whether you are a big home lover or not, I am definitely not one of those. I love my house, but I don't like to work on it. I built a studio in the house, which was awesome, but eventually I gave up. You'll notice there's actually a hole right here. I was to the point where I was lazy enough that I actually took a photo up in there because my shutoff valve for my water outside is there. And I knew that I would actually get a little bit lazy and not fix that. So that actually was drywall, but I had photos, so I knew where to cut later on because I gave up. I was like, I'm done. I don't want to work on this room anymore. And it came to be winter, and it snows here in Michigan. And I knew exactly where to cut, luckily, so I could reach my hand and shut that valve off. I'm sure most of you don't love working on your house. Or if you do, you eventually get tired of the project. Well, home improvements can affect your price because, once again, the older your home is, the more risk, the more likely it is to have problems. If you have wood siding, you have to paint it every year or every few years, and that's going to be a deterioration where the wood can get rotted. And then the problem is where they break apart on a major storm, just like your shingles would, that can cause claims. So the older your home is, the older everything else gets. Updating helps a lot. Anytime you do a major update, there's 5 updates, which I'll make a separate video on. So subscribe if you guys want to follow once that goes live. Don't forget to hit the bell icon to turn that one on. And the number 11th way is a combination of all of these. So a lot of these were based on credit, were based on the way that you maintain your home, the age of the roof, things like that. Insurance companies don't have algorithms that tell them every single year that this has changed or this has changed, or check to see if this has changed. They're not watching you, so to speak. They are taking the data that was inputted and adjusting year over year to get that inflation, and that's where that comes into play. But what they don't do is they don't check for new claims with other companies. So if you have multiple homes and you have a home with someone else, that could affect your insurance because you're willing to file claims. Now, a lot of that can be fought for and won against, but that doesn't stop them from checking that. And so the last and 11th biggest way that your home insurance can go up is because they rerun your CLUE report, which is the claims history that you've had, which in turn runs your insurance score. That's your credit piece, which in turn checks all of the dated information to see if there's changes. This typically is the biggest reason I see the prices go up drastically, but it's not as common as it sounds because it does affect more often than not. It just doesn't get ran as often. Insurance companies have to pay for a lot of these reports, and they don't want to pay for no reason. So unless your neighborhood has grown drastically or something has changed in your area specifically, they're not typically going to have a reason to check that. So when is the best time to shop for new home insurance? Well, that's an easy question. It's almost never. The home insurance typically doesn't go up a lot. The average cost for house insurance, in case you want to compare, is about $1,200 a year. And they don't typically vary a whole lot from year to year. Sure, you'll have companies that do have a 3% increase every year, and maybe in 5 years that 15% increase is too much to handle. So let's take the average and do the math on that. So if you go up 3% every year, you go from $1,200 on average to $1,226 the following year. And if we multiply that by the additional 3% for the next year, now you're $1,273. And then we go another year for 3 years in, you've gone to $1,311. So in a 3-year period, you've gone up $111, which is roughly $10 a month. And it usually kind of caps out at a certain point. So it's not going to keep going to $1,800 and $2,200 and eventually. So if you go off of those stats, if you're with a company that does have a rate increase every 3 years, it may make sense within that 3 to 5 year period to check some other options. Almost every time people shop, it's because of your auto. Your auto fluctuates so much. And I've got about 100 videos on this channel that goes over how to fix your auto and what you need to know about that. So that's the piece that causes people to shop most. But in general, home insurance tends to stay pretty stable. So let me know what you guys think. What is the companies that you found have fluctuated over the years, and what type of increases have you seen? Did you call the company to find out what those causes were? I'd be very curious to know, and then we can share this with the community. What options have you seen that have causes increases in your premium? If you guys are interested, I am going to put a link to a playlist here. So there's about 20 different videos that goes over how to get best rates on home insurance, what home insurance companies are number one, all those things across 2021. And you guys can research that if you want. I'd love to get those comments below so that you guys can let me know what you found. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.